Hello traders and welcome back to the Forex Geek where we dive deep into the tools that can help you make smarter trading decisions. In today's video we are going to be talking about the MACD range trading strategy, which is a powerful approach to trading in sideways markets. If you've ever struggled with false breakouts or missed opportunities in ranging conditions, this strategy will show you how to use the MACD indicator to pinpoint precise entry and exit points within a range. So stay with me until the end and you learn step by step how to master this technique and turn range bound markets into consistent high probability opportunities. And without wasting much of your time, let's get started on that. First of all, I would like to explain the MACD indicator, which is this indicator here. It is a technical indicator widely used by traders to analyze market momentum and identify potential trend reversals. It is built on the relationship between two exponential moving average EMAs, and we're talking about the 12 period EMAs and a 26 period EMAs. The fast length and the slow length, as you can see in the settings. The difference between the EMAs forms the MACD line, which is then compared to a 9 period EMA called the signal line. Now the MACD line is the blue line and the signal line is the orange line. And this indicator also includes a histogram that visualizes the difference between the MACD line and the signal line, helping traders gauge momentum shifts. This is the histogram bars, and we have red for negative momentum and green for positive momentum. So how does the MACD work in ranging markets? Before we talk about the strategy, let me explain how MACD works, especially in ranging markets like this one. How exactly does the MACD work? So MACD is traditionally associated with trend following strategies, but it can also be highly effective in range bound markets where price fluctuates between established support and resistance levels. Okay, I'm looking for a good range bound market. I have one here where price just keeps ranging and ranging between highs and lows and highs and lows. So in such conditions, the MACD helps identify overbought and oversold conditions within the range, signaling potential reversals. So when price approaches support, look for the MACD line to cross above the signal line or for the histogram to shift from negative to positive. And also within the range, when price nears the resistance of the range, you should wait for the signal line or for the histogram to shift. Wait for the MACD line to cross below the signal line or wait for the histogram to shift from positive to negative, indicating bearish momentum. So I'll explain this better when we talk about the strategy. So I advise you wait and watch these videos up until the end to gain the full insight. Normally, the key components of MACD, the MACD in range trading, the MACD line, which is the core of the indicator, it shows momentum shifts based on moving averages, and I've explained the components. Let's talk about strategy. The first step is to identify a clear trading range. We have one here. We look for another one. Okay, we have another clear trading range around here. I have one here where price is just moving between support and resistance, failing to break any of them till it finally broke this. And looking for good ranging markets which we can use for our example. So the very first step is to identify a clear trading range. We have one here. Actually do have one here. Price is just ranging. Price ranging with no particular break to the upper side. So looking for those range bound markets. This one I can't necessarily classify this one. Alright, I'll just look for a better one. Alright, let me work with these ones I have. So begin by analyzing the market to locate currency pairs that are trading within a defined range. Remember, a range is characterized by horizontal and support and resistance levels where prices consistently bounce back and forth ensure the range has been tested multiple times on both boundaries for reliability, which is why we're looking for a better range which we can use for our examples. I'll suggest you use higher time frames like the 1 hour, which I'm on, or you can use 4 hours. The wider the range, the better it is for trading opportunities. Avoid ranges that are too narrow as they may not provide sufficient movement for valid signals. The next is to apply the MACD indicator, which I have done. Ensure you set to the default settings and 12, 26, and 9. And the next step after setting up your MACD indicator is to wait for price to approach range boundaries. Now, range boundaries is the horizontal support and resistance line of a range. For example, this is a range and these are the boundaries. The upper lines and the lower lines are the boundaries. Price is just moving all inside this range, failing to go above or below it. That is the range for you. Now at support, when price gets close to support, like this, price actually broke away from the range but came back in and continued the range. In support areas, look for the MACD line to cross above the signal line and for the histogram to shift from negative to positive. How do we do that? Remember, you should be at the support area, which is at the lower boundary. So this is the support area. Now at the same time, you should look at the MACD line and ensure that the MACD line crosses above the signal line. Remember, the MACD line is the blue line, the signal line is the orange line, and we have that crossover happening here at the support. It's very straightforward. At support, look for MACD lines to cross above the signal line and for the histogram to shift from negative to positive. We have all of that criteria happening right here. Have from negative to positive, we have the MACD line crossing above the signal line, and we are close to support. So it could signal that this range may be over and we may be just looking to buy and break above the upper boundary. For sell trades, you should look for this at resistance. Arizona look for the MACD line to cross below the signal line and for histogram to shift from positive to negative. Now the next step is to, after spotting all of these criteria and they've all formed, the next step is to enter the trade, but you must use confirmation. Now your confirmation for long trades at support. Remember, the first step is that price must near or slightly be above the support level. The MACD line must cross above the signal line. We've seen all of that. And histogram must show increasing positive momentum, and we've seen all of those criteria. Now, the next step is to wait for price action shifts before we can enter our buy signal. We'd like to see price actually break above the upper boundary. We'd like to actually see price break above the upper boundary. Now, if you are an aggressive trader, you just place your buy entry once price has broken free from the upper boundary, stop loss below that support, and take profits at fixed risk reward ratio of 1:2 or 1:3. But if you are not aggressive exactly and you like to wait for further confirmations, I advise you use your Fibonacci retracement from the support to the break above, wait for price to come back to 50% or your golden zone, which is the 61.8% before you enter your trades. Now we have price coming back to the between the 50 and 61.8% here, for giving us a push to the upside. So we just need to take our buys. If you are a conservative trader and you need that extra confirmation, you need to see price make certain moves before you just jump in. You wouldn't like to just jump in because you've seen price break above that high. So you wait for price to do this stop loss below this support. So whichever trader you are, this strategy is for you. You can practice it. Now, aggressive traders should be out of the trade at 1:2, but traders who are conservative will get higher risk reward ratio and better confirmations. But sometimes they might miss opportunities. Sometimes price don't come back to 50%. Price could just keep flying high, especially in cases like this where the momentum is high. We're talking about the MACD. So the bullish momentum would be so high, especially as it breaks out of the range, that we won't get a retest. So at these areas, it's likely that you as a trader just wait. Maybe if you're not aggressive, If you're conservative, that just means that you've missed that trade. Now let's look at this example for a sell trade, for a bearish example. We have this range. This is a range. Price fell into break below this, break below this. We keep going, fell into break below this. Now finally we have the break. Now I would suggest, remember this, the criteria is simple. Wait for price to be near or slightly below the resistance level, and we have that happening right here. At the same time, we should wait for the MACD line to cross below the signal line. And if you see, we had several crosses here showing typical of a ranging market, but we had the final cross happening here. And also at the same time when we had the final cross, we have our MACD, our histogram bars turning from positive to negative and increasing, showing that the selling pressure, the selling momentum is actually strong in the market. In cases like this, we just look to just wait and wait for price to break. Remember, the goal is to wait for price to break this. Aggressive traders, once price is out of here, will just look to just sell short. But we are bullish, and this is just for a minor pullback. So just look to close our trades out at 1:1 or 1:2. In this case, we aren't able to get 1:2. Just able to get struggle with a 1:1, 1:0.9. All right. Traders who are conservative will be looking out to trade from areas of price action. We have this breaker block happening right here, and price retesting before the sell, so they'll be able to get bigger risk reward, higher risk reward ratio. Here they're able to get 1:3 risk reward ratio here using that breaker block confirmation. So it's all about, you could use the Fibonacci or you could also use the breaker blocks. The main thing is that you wait for price to give you a pullback and a confirmation before you just jump into the trade. So let me look for one last example. Okay, I'm gonna get a better example. All right, we have one here. I have one ranging market happening here, but I like to check if I have a better example. All right, see this one. Price was ranging here. We have price ranging here, and if you're just looking to take your sell trades, you can see the alignment. Price got close to the resistance. At the same time, you have price giving us the change here, and you have the red histogram bars signaling enough selling pressure, enough selling momentum in the market. We have price give us this minor pullback to that lower boundary, giving us several confirmations to just take a short scalp trade there. And looking at other examples, I have another ranging market here. Price was ranging, failing to go below highs, below lows. And finally, we have the crossover happening close to resistance, close to here, and also have a red histogram bar signaling that we should be looking to sell. Have this break below here. I'll just look to use that as our breaker block. See sell trades when price retested that and take profits all the way down. Alright, this is how you can use the MACD range trading strategy to take high probability trades in the market. It's very easy. I advise you practice, set your take profit targets within the range, and this ensures you exit before price reverses back. And I'll also say that you should practice backtest before engaging live with real market funds. Alright traders, you've come to the end of the video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.